Now, I'll go to Dr. Sarnambar Roy, uh, SVP and officiating CRO, Infomerics Rating. So, sir, if you can give us an outlook for India's recovery to its pre-pandemic size and level of growth. What are the strategies to revive the economy? And if you can also discuss on the overall growth expectations and various counter-cyclical strategies that banks and financial institutions can take. And if you talk about throw some light on active credit portfolio management or the dynamics behind it, the portfolio management, credit risk point of view, if you can throw that, initiate that discussion.
Thank you, Dr. Bandhavadhyay, and thanks to all the participants here. Good afternoon. So yes, before I'd like to dwell myself on an India-specific theme here. And before going into the outlook for the Indian economy or the strategies to take the economy back to pre-COVID levels, I would like to dwell sometime upon the background to this risk. The background, COVID, when it struck, it's a black swan event that has happened, and nobody could foresee the way things happen. The lockdown, people away from work, migrate in India, migration from the cities to the reverse migration from the cities to the villages, distorting the labor markets. So these things happen. So it's a black swan event. So what happened here was that if you could see that sales of companies was negatively impacted in the lockdown quarters, very significant amount of negative delta that happened in the PNL in the lockdown quarters. uh, because in one hand you have sales going down, on the other hand you had most companies had to bear their fixed costs. So we all this is a group where everyone knows how the PNL is constructed and all. So we know how this would have negatively dampened the PNL entirely. Then another thing was capex. Capex completion or companies going into capex has been affected negatively a lot, because companies have become intrinsically very conservative. Nobody knows what the future is there, how whether we go get labor for our completion of our project. So capex, and on the other hand, on the supply side, the banks have also become inherently conservative. That is a part of their counter-cyclical strategy, which I'll dwell later on. So coupling of this has been that capex completion has been severely affected. There has been a distortion in the labor markets, abrupt fall in demand, and so summing up, this is heightened business risk and also cash flow stresses. So this is a situation which no one wants to be in, but it has happened. So in India, what we have seen is that if we go, I'll also, as Pranav dwelled on the global, on the sectors affecting globally, globally which sectors were affected. In India, what we saw is the construction sector was briefly affected because there was no labor availability. We had a commercial real estate, tourism, hospitality, aviation, some of the 5-6 sectors that have been affected very abruptly or negatively by COVID or lockdown related, mainly by lockdown related stresses. But on the other hand, we could see some sectors that have become very resilient, who have shown resilience to this crisis. These are one is pharma, hospitals, FMCG, then auto, which has come up, then residential real estate also because of certain fiscal incentives given by the government, steel because of the, and steel also because of the commodity cycle. Now, if we go to the growth strategies which should be in place to revive the Indian economy. Now, this is when we come to this topic, it is not just COVID. The Indian economy, there are a lot of problems a lot of problems or a lot of constraints, I would say, in the Indian economy. If we compare per capita GDP, and COVID affected those constraints very severely. The optimization of the opportunity set in before has reduced considerably, to the extent that Bangladesh, our neighbor, has overtaken us in terms of per capita GDP. Now, so we have a long way to go. So how do we do it? So one aspect which some notable economists has also said is more cash to the common man. Now that this is a very debatable concept, but if you see, it can propel the economy from these dark times. It can the and when cash comes to the common man, their spending power increases. it goes directly into propelling the economy into a growth path. Then, which the government is doing, which the government of India is doing on an indirect route through fiscal benefits, through monetary transmission, and such strategies in place. Also, infrastructure projects. We have been seeing that the government of India has announced a lot of impetus on infrastructure projects. There is a sizable budget outlay on infrastructure projects. Now, infrastructure projects has a lot of multiplier effect on the Indian economy, because one is, we know this is a labor abundant country. We might, unfortunately, Indian economy took a service sector approach growth, whereas rather we should have taken a secondary sector or a primary sector approach towards growth. This is a distortion in the Indian economy. And why I'm touching upon this topic is that some of our neighboring countries, or the Southeast Asian countries, including Bangladesh now, which is a very hello, yeah. So they all actually concentrated on secondary sector strategies, on how to improve the factory sector, on how to improve, mainly how to improve the factory sector, because that absorbs surplus labor, that pushes money into the economy, and that actually pulls people out of poverty, which is the biggest constraint for any emerging economy. So that is why the government of India has now risen to this fact and has actually pushed a lot of impetus to infrastructure projects. The second strategy should be to reduce distortion in the agricultural sector. The agricultural sector distortion is a long story for the Indian economy. It's whether COVID is there or not there, those distortions have to be removed. There has been a contentious farm bill in process. We don't want to go into that, but other than that, setting up of cold storages, getting corporates into picking up of agricultural produce, ensuring that agricultural productivity improves. How agricultural productivity will improve? Some states have reduced the share of landholding and have seen an improvement in agricultural productivity. Some states have seen, like Punjab or Haryana, have seen agricultural productivity rising through the green revolution. So there is a mix and match history behind us, which can be used to the improvement of the agricultural sector. Then the other important aspect is the monetizing of public assets to the PPP model, or the public-private partnership model. We have a huge public sector sitting back with us due to our reliance on the public sector way of economic growth, long back from the 1950s, the Mahalanobis plan. But now the time has come to monetize these assets through the PPP model. Some of the core assets could remain with the government of India. Other assets can be monetized, and the inflow from the monetization of these assets can be actually channelized to poverty alleviation, to the creation of infrastructure, and to put the Indian economy on a growth path. The third important aspect is to focus on a health economy, onto the building up of a health economy. COVID has actually brought forward, or COVID has actually opened our eyes to what economists have been saying from a long time, that India sadly never had a focus on health economy. And except one or two notable states, I don't want to name them, none of the states, the health is a state subject, but none of the states have actually focused on improving the health indicators. That is why we are very low on the Human Development Index. And and if today India had a buoyant health setup, then this reverse migration, or the second wave of COVID that affected us very badly, this wouldn't have happened. So, but sadly, I still don't see that amount of fiscal incentives or fiscal chart map being brought out by the states, or even by the government, or even by the central government, in improving the health economy. This is something which has to be taken by policy planners. The second is, and one of the most important, is the financial sector has to play an important part in revival. So how does the financial sector play an important part in this revival? This is where this has to be both from the regulatory aspect and also from the supply aspect. From the regulatory aspect, it is fortunate that the Reserve Bank of India, SEBI, they took certain steps when the COVID crisis emanated. They took steps such as giving moratorium, giving a one-time restructuring scheme. Then there was emergency credit line scheme which came up for giving from wherein the central government stood as a guarantee for onward lending from NBFCs to onward lending to microfinance institutions. These are very positive steps, and this would help the movement of money coming, indirect way of money being channelized from the government of India to the last borrower, to the last mile borrower. So, and on the supply side, banks which have become conservative, very aptly so, because no one would like to lose money. Banks wouldn't like to lose money as part of their counter-cyclical strategies. But slowly and slowly, they have to come out from ultra conservatism to moderate conservatism and start disbursing funds to the borrower, to corporate borrowers, to retail borrowers. This is where the economy. Otherwise, the economy will get into a trap. It will get into a low growth or a stagflationary trap. So because we are already seeing inflation at high levels due to the commodity cycle, and the growth, and if growth if growth sticks around these levels, then we are in a stagflationary trap. So to come out of the, banks have to play a very proactive role. They have to strengthen the risk management departments. They have to strengthen the early warning systems. They have to combine all these factors and slowly start disbursing funds. Government of India has taken some proactive steps in this matter, but unfortunately, when we see this, the TLTRO scheme, the targeted long-term repo scheme, most of the funds are garnered by AAA and AA rated NBFCs. My triple B or A rated NBFCs, these are the kind of NBFCs which are at the lower rung, medium rung of the credit chain, who gives funds to the moderate profile of borrowers. They couldn't garner these funds. So what we are seeing is ultra conservatism in lending. That has to somewhat, we have to migrate from this ultra conservatism to a moderate conservatism strategy. And the last important thing is the counter-cyclical strategies by banks and FIs. Now, the counter-cyclical strategies, which I have seen sadly, has been increased lending towards blue chip borrowers, conservative credit disbursement strategies, adoption of robust early warning system, and strengthening collection mechanism and strengthening their recovery processes. But as we move, this might contradict what I had said earlier, but as we have to fight this COVID-induced lockdown of low growth, we'll have to move from these counter-cyclical strategies, which the banks have currently adopted, and actually get into a path of higher disbursement and sanctioning of more credit limits to credit-worthy borrowers, and propel the economy onto a new growth path. Now, coming to the last topic which Dr. Bandyopadhyay broached, was dynamic credit risk management. Now, it is really that the credit markets have become very dynamic. Earlier, there was the topic which was broached upon was the historical negative correlation between equity markets and credit markets, which were broken briefly. And so earlier, credit risk was a bit more static than equity risk. So when a credit rating agency, or when it gives out a rating, or a bank does an internal rating, it is supposed to be through the cycle. But the way the P&L of companies, of the underlying companies where credit is given, that has analyzed the way that the way they have, there has been a significant downfall in the P&L, or significant losses, which then transfers into the balance sheet and impacts your debt protection parameters. It becomes very scary, and ratings go down. So in this manner, you'll have to actually do a lot of stress testing. Scenarios have to be built up, and stresses have to be built onto the credit risk portfolio, and to see what is the kind of capital a lending institution has to keep. So that brings me to the next my next point, is that banks have to shore up or NBFCs have to shore up their tier 1 and tier 2 capital, and keep a buffer of liquidity with them. A wall of liquidity has definitely been built by the regulators. A wall of liquidity is there with lending institutions that is propelling certain asset classes. These are welcome signs. But this wall of liquidity has to be channelized to the secondary sector, to the real sector of the economy. So that is when the Indian economy will be propelled towards the next growth path. Thank you, sir.
Thank you, Dr. Sarnambar Roy. Very, very insightful discussions. You have given a macro perspective and how the variables, macro variables are working or can work, and how banks can respond to this, the importance of financial sector to move with those expectations, and the role of active portfolio management. So really, it is very, very rich in your in the discussions.